Good morning, everybody, and welcome to our BCsystems webinar for property professionals, property managers, and on-site managers. My name is Matthew Savage, and I'm the operations manager here at BCsystems. I can see the attendee counts clicking up by a few people, so it's just on 10 o'clock and we'll get started. For anybody who you may know who has missed out on today, the webinar will be recorded and we'll distribute that after the session. So you're quite welcome to share this with anybody who you think it would benefit, particularly in your industry or in your office. So as I mentioned, my name is Matthew Savage. I'll be taking us through the session today. It is a Q&A webinar, so we have invited registrants to submit questions prior to the meeting. And we've got about 16 questions so far. I would encourage you as we go through and I cover different topics to pop any questions you've got in the questions box in GoToWebinar, and I'll go through and answer as many of those as I can at the end of the session. So we did put out some topics that we'll cover. So we'll cover those 4 topics and then we'll go through the questions. And I'm quite happy at the end if there's additional time to answer anything that you've got or anything you wanted to talk about without notice. So let's get started. Okay, so the topics that we'll cover today is how levies are set. So I'll give you a quick overview of the body corporate manager's perspective on levies and some of the things that it'd be good for you to keep an eye on. We'll cover some maintenance basics in the various types of format plans in Strata in Queensland. We'll cover pets, a summary of the current laws and how pets are working and how we see things happening at the moment. We'll discuss the link between bylaw breaches and tenancy agreement breaches and what you can do and how you can be empowered to help ensure compliance within the complexes that you're involved with, and then we'll go through the Q&A. So first cab off the rank is levies. So I know that from our data that we see quite a lot of levy notices are issued directly to property managers. So if you're an on-site manager for a particular complex, you'll often get a big batch of levy notices and pay those from rent. And alternatively, if you're, a quote-unquote normal property manager managing a bunch of different properties in a lot of different areas, you'll probably get a few hundred levy notices per month and pay those from rental proceeds. So it's not that you need to know how these levies operate, but if you're the person who's paying the levies and putting your rental client or your owner on notice when you send through your monthly statement, often the questions about levies will go to you first. So the more you're able to answer, it'll make you sort of a professional in that sense, and it might avoid any misunderstandings about where owners' money is going and why their rent that month is lower than what they thought it might be. So that's why it's important to know how levies are set, just at a basic level. Now, all levies in Queensland follow 3 different categories. So there's the administrative fund levy, the sinking fund levy, and the insurance levy. Administrative fund levy is probably they each have their own questions, I guess. Administrative fund levy, the questions we get about that are very different to the sinking fund. So in the administrative fund, this is where the body corporate pays for all of its annual running costs. So it's the easiest fund to understand, but it probably has the most confusing name. So it should really be called the running cost fund or the annual maintenance fund or something like that. The way that levy is calculated is we prepare a budget with the committee each year, and we just look at all of the costs that the body corporate will incur in that financial year. We add them all together and then we divide it by the number of owners. So there's really no black magic in the administrative fund. It's simply a matter of adding up all of the costs, dividing it by the number of people who pay those costs, and that works out at the rate which owners pay to keep the building operating. So most of the costs that you would pay in a household environment, the body corporate also pays those. So the administrative fund pays for things like water bills for the common property, electricity, If you've got an on-site management agreement, it would pay for the remuneration of the on-site manager. It'll pay for tools, so fuel for the lawnmower, mulch for the gardens, fertilizer, pool cleaning, pool chemicals, lift servicing. So anything that's an ongoing cost, which is in the maintenance of the common property or the operation of the common property, is paid from the administrative fund. Probably the biggest misunderstanding is because it has the word administrative levy in it, a lot of owners think that that is a fee to pay to the body corporate manager to do the administration work. So we do an administrative job, but the administrative levy, the wording there comes from the legislation and it has nothing to do with our administrative work. So one of the costs that a body corporate does pay is for a body corporate manager to do the accounting and the secretarial work or the administrative work. That is paid out of the administrative fund, but it's generally quite a small portion of what the administrative fund is collecting for. So that's why I say annual running costs would be a better way to describe the administrative levy, but unfortunately we're just stuck with the name that the legislation has chosen to give that fund. In terms of trends in the administrative fund levy, because it's paying the annual running costs, if the spending is stable, so if the building is generally doing the same thing this year as it did last year, then we would expect the administrative fund levy to generally rise with inflation. So inflation, as I'm sure we all know lately, is the increasing cost of the same goods and services over time. And the body corporate is exposed to that same pressure like everybody on this webinar is. So everything the body corporate purchases or all of the services that the body corporate takes out generally rise in cost year on year. So when owners see their administrative fund levy increasing, 3%, 5%, that doesn't mean the body corporate is, going crazy and wasting their money. It just means that the things that the body corporate is purchasing and providing to the site have risen in cost in line with the general economy. So it is normal for administrative fund levies to rise generally with inflation. Where you'll see administrative fund levies change is where the body corporate has made a change to what it's doing. So if, for example, the body corporate has a gardening contractor coming once a month and everybody's complaining that the gardens aren't looking good, and the body corporate decides to increase the gardening frequency to once every fortnight, that would double the number of services of gardening in 12-month period, and the cost of gardening in the budget would double. So that would make us an increase to the administrative fund levy because of a change that the body corporate implemented. And of course, on the flip side, you would expect the place would look better and rental and sale proceeds would increase in line with those improvements. So that's where you see administrative fund levies changing beyond inflation. Another trend we see is that smaller buildings are generally more easily influenced by price rises. So if you think about a block of 6 units, it has a much smaller budget, and therefore the gardening bill or the electricity bill as a proportion of its total spending is much higher. So if the electricity price rises by 20%, that would have a bigger impact on a smaller building's administrative fund levy. In a bigger building, so in a high rise in the city, it would obviously have a much higher electricity bill in the first place. So a 20% rise in electricity cost would still be a big increase for that building, but it would be only one of a lot of other costs that would generally stay the same. So the percentage increase you'd see for the same electricity rise is probably more exaggerated in a smaller building. And that's often counter to people's intuition. So a lot of owners say to us, look, my building is small, so therefore the levies should be really stable and should stay lower than a big building. But what small buildings don't have is economy of scale on their costs. So it's often the other way around, where small buildings are more exposed than big buildings. So that's administrative fund levy. Insurance levy, this is the easiest one. The insurance levy just pays for the cost of the building insurance policy. So most schemes in Queensland, the body corporate will provide building insurance for the whole building, not contents of course, but building insurance. And if the building has an insurance levy, that insurance levy should closely match the amount of money that the body corporate spends on its insurance policy. That levy is separate. It's an administrative cost because it's an annual cost, but it's often separated because the way the insurance levy is calculated based on individual lots can be different to the administrative and sinking fund levies. So when something's calculated on a different ratio system, it has to be separated as a different levy. So that's why some buildings you'll see an insurance levy and some buildings you won't. If you don't see an insurance levy on a particular invoice, it's generally included in the administrative fund levy and paid on the same ratio system as the admin levy. Our sinking fund levy. So again, highly debated among lots of buildings. Importantly, the administrative fund levy and the insurance levy are linked to spending in that year. So whatever the body corporate's spending, it needs to bring in that same amount of income pretty much, otherwise it's going to go backwards. With the sinking fund levies are not linked to the spending in that year. So a sinking fund is a savings fund and it's a long-term savings fund. So no different to, households. If you're saving up to buy a new car or do a renovation, you're saving money every year, even if in that year you're not actually spending anything out of that savings. So the idea of savings is that it gets bigger and bigger over time. So we will see a lot of questions in the sinking fund where the body corporate has raised its sinking fund levies, and that's raising the savings amount. And owners may say, well, nothing's being done. What are you spending that on? But that is not the right question, because the body corporate's not spending the sinking fund money. It's just raising it. So it's really forced savings as a group. The idea of the sinking fund levy, I suppose, is that if a body corporate didn't have a sinking fund and things needed to be done on the property which were expensive, it would be very difficult to get owners to pay big lump sum payments of $10,000, $20,000 at a time. So instead, the law requires owners to pay that money in every year. So the theory is when the body corporate needs to spend it, it's already got it or got most of it in the bank account. The sinking fund levy is based on a 10-year projection of capital costs. So the amount of the levy is not just made up. It is based on a quantity surveyor's report that says over the next 10 years, this building needs to spend $100,000 and you've got 10 years to get there. So, that's $10,000 a year. And after 10 years, you'll have the 100 grand and you can spend it on painting or whatever the project is. And of course, buildings have lots of different projects on the go at all different times. So it's a combination of all those projects, and the annual levy is required to meet those. Some principles and some, I guess, quick tips on levies. The amounts in the AGM notice are shown as per entitlements, which basically means per share of ownership in the building. Lots can have a multiplication factor, which is how different lots can pay different amounts. So you'll sometimes see buildings where the AGM will say, look, the levy is $1,000 per quarter, and that is actually what owners get. If it shows a big amount, it means owners are generally paying the same as each other, because each person would then have one entitlement. So it's $1,000 times 1 equals $1,000. When you see AGMs with tiny amounts like $6 or 87 cents per levy, that doesn't mean they're only paying $6. That would be $6 per entitlement. And you would then look at the schedule of entitlements, and lot 1 in the building might have 957 entitlements, and lot 2 might be bigger. It might have 1,100 entitlements. So it's the levy times by the number of entitlements, and that's why, or that's how different lots can pay different amounts in buildings where the lot types can be different. So larger lots versus smaller lots, or commercial versus residential. So a lot of people, when they see the AGM, they see that the levies are going from $6.20 to $6.30, and it looks like a 10-cent difference. But when you multiply it by their entitlements, it actually comes out to be, maybe a couple of $100 different. A levy is not a fee. So I put this on here because a fee is something that a business charges, and the business can generally decide what that charge is. A levy is not decided by a business. It's not a business function at all. It's really just taking the cost of the building and dividing it by the owners. So there's not a lot of discretion in it, and it's not set by a business. It's set by the body corporate as a group. It gets assistance from a business like BCsystems to work out what it needs to be. But a lot of people think because it's on our letterhead, it's a BCsystems charge, and we've decided to put prices up, 3%, 5%, when in reality, the price changes just based on what the body corporate is spending year on year. A levy has no profit margin. So again, unlike a business, we run our business at a profit, otherwise we wouldn't be here, like every business in Australia tries to do. A levy is just taking what you're spending and dividing it by owners. So no profit margin means there's no fat in the levy, and there's really no ability for it to be reduced, because if you reduce the levy, then you're not bringing in as much money, you can't spend as much, and you need to cut back on services. So the way levies can be reduced isn't by just reducing the amount of income. It needs to be, firstly, the body corporate needs to review what areas it can cut back on spending, and then the levies can come down. Levies are a big deal in Queensland, so there's billions of dollars of levies issued in Queensland every year. There's around 45 to 50,000 bodies corporate in Queensland only, and then the lots in those bodies corporate is more than 500,000 people own lots in body corporate and pay levies. So it's a big part of the economy for bodies corporate. Every dollar spent on a building, no matter what the building is or where it's from, is raised by levies. Every levy is also proposed as a draft to every owner at every AGM before it's invoiced. So I know a lot of owners don't participate in their AGMs. They don't, they don't vote, or they don't read the paperwork, but a levy is never imposed on an owner. It's always said to an owner, this is what the body corporate needs to spend. Do you agree, yes or no? And every levy that gets issued in an invoice form has been approved by that body corporate by a majority vote. So that's important to know, because complaining about a levy is different to looking at it, understanding how it's been calculated, asking a question about it maybe, and then casting a vote. So if you don't vote at the AGMs, or if your owners don't vote at AGMs, they're missing that opportunity to actually participate in setting those levies. And levies are nearly always set at the absolute minimum possible amount. So there's generally no ability to reduce levies. Usually, a body corporate will raise the absolute bare minimum, and in fact, when that happens and costs go beyond what they were expecting, or a project comes in at a higher amount, that's where you get a gap in what you've brought in versus what you need to spend, and that gap is filled by special levies. So special levies they just show when a body corporate didn't raise enough money in the first place and now needs to raise a special levy to catch up the difference. So that's levies. We'll go on to some maintenance now. So maintenance basics, this will be quite quick, I suppose. The idea is to give you some principles, not to set out every individual item of maintenance. The basic questions are, where is it? So where is the problem that you're talking about, or the issue that needs to be repaired? And then the second question is, who is that thing benefiting? That's an important question, because a lot of the body corporate law relies on who is benefiting from a particular service, and that determines who's responsible to maintain it. So for apartments, it could be a high-rise apartment or a six-pack of old 1970s brick units, anything that's an apartment rather than a townhouse or a house. Apartments are generally a building format plan, so these rules will generally be applicable. Inside the lot, inside the unit, will generally always be the owner's responsibility. Balconies and courtyards are generally the owner as well. Car parks will be the owner. Smoke alarms are a big one at the moment. Those are the owner's responsibility inside the units. Anything that's outside the lot, so out on the common property, but is a sole user device, so only benefiting one lot. So like the compressor of an air conditioner or a hot water system that might be near the driveway but only provides hot water to one unit, that'll be the responsibility of that owner. So it belongs to the owner. The owner has to maintain it, even though it might be physically located on a common area. And then this might be logical, but anything that's outside the lot and is shared, that's generally a body corporate responsibility. So if there's one hot water system that provides a service to all of the units, then that's a shared service, and the body corporate would generally maintain that. Most duplexes and townhouses are also a building format plan. So the rules are are generally similar for most duplexes and townhouses, which is that inside the property owner, balconies and courtyards are owner. Fencing is something you don't get in apartments generally, but in duplexes and townhouses, fencing is generally shared between the two people on either side of the fence. So if it's between two units, those two people will generally split the cost. If it's between a unit and the common property, it's generally a split between the one owner and the body corporate. The external building structure, so external roofing, gutters, doors, windows, and brick or weatherboard or whatever it's made out of, that's generally a body corporate responsibility, both for apartment buildings and also most duplexes and townhouses. And those are building format plans. So that wording is quite important. And if you're unsure about responsibilities and Google that in Queensland, you'll get some fact sheets from the government's website. Next page here is some townhouses and freestanding homes. So there are body corporate developments that are a standard format plan, and that's generally a way of arranging townhouses and freestanding homes to have like a shared pool or a shared driveway system. These are less common in Queensland, probably 20% or less of bodies corporate are a standard format plan. So it is much more unusual than a building format plan. In a standard format plan, the rules are generally the same as normal houses. So people own the land and they therefore own all of the building stuff on that land. So in that case, a lot owner would own the whole house, the roof, the gutters, the windows, doors, all the landscaping, all the fencing. That would all be that lot owner's problem to maintain. The body corporate in a standard format plan generally only deals with shared roads, shared facilities, and some of those shared items like a barbecue or a hot water system that are shared across a number of lots. Those scheme types have generally much lower levies as a result. So because the body corporate's not paying for roofs, it's not paying for that in its administrative fund to maintain the roofs. It's not saving up sinking fund levies to replace the roofs in the next 20 years. So the levies will be lower, and the offset of that is the owner will pay higher costs personally because the owner has to maintain things themselves. So that standard format plan, building format plan is a big distinction, and you can't tell by just standing out the front of a place and looking at it. You've got to look at the plans and look at the documents for that particular body corporate and understand which type of plan it is. A body corporate manager will be able to tell you if you call them. It is the body corporate manager's job to know what those distinctions are and apply those rules accurately. But as a property manager and as an owner's representative, if you know those rules, that can inform, there's no point asking the body corporate for help with a roof of a standard format plan because the answer you'll get back is it's the owner's problem. So the more you know, the more efficiently you can deal with maintenance of your own properties that you're managing under those two different types of buildings. Let me have a look here. Next topic, pets. I'm sure that's everybody's favourite topic, property management. A summary of the current laws. So there's been a lot of discussion about pets in the last 6 months. There was a change to the RTRA Act, which I'm sure everybody on the call is aware of. We have done some previous webinars about what some of those changes might mean for bodies corporate and how we will be dealing with it, what bodies corporate may or may not do in the new environment. We're sort of now, I think that regulation came in October, so we're probably 5 or 6 months into those new laws being in effect, and this is what we're seeing on the ground. So a summary of the current situation: a body corporate cannot ban pets outright. That's not a new rule. That has been the case law for probably between 5 and 10 years. So if a body corporate has a total ban on pets and the bylaws say no pets, no discussion, that is not a valid bylaw because it does not take into account the individual circumstances of owners or of the pets or of the residents if they're a tenant. So if you've got a building with an absolute outright ban on pets, that bylaw would generally be invalid. It doesn't mean you can just bring in any pets you want on day one. The process in those buildings is that one of the owners in that body corporate needs to put a motion to change that bylaw to something that's more valid or is valid, or create a dispute with the body corporate and have the body corporate commissioner adjudicator rule that bylaw out of order. So it doesn't mean that you just ignore a bylaw, but there is a way to resolve those bylaws in those buildings and have that body corporate amend it so that it is compliant with the current laws, which would be a regulatory bylaw rather than a ban. But it takes an owner to go to that effort. The body corporate could change the bylaw by itself, but sometimes you'll see the body corporate really wants to keep that bylaw, and it's up to an individual owner, property manager, tenant, to be the first person to kick up a stink about it and get it fixed or get it changed. A bylaw can regulate pets, so it can't ban pets, but it can regulate pets. And it can say that you can't have pets without approval. So that approval process is the element of regulation, which makes it different to just a total ban on all pets under all circumstances. So the body corporate regulating pets by an approval process is definitely the absolute most common type of bylaw. I don't have data, but I'd say 99% of buildings we've ever experienced or worked with have a bylaw that says you can't have a pet unless the body corporate has approved it. It's also the default in the legislation, which is why it's probably one of the most common types of bylaws out there for pets. So that bylaw is unchanged. Bodies corporate definitely can still regulate pets exactly the same way they always have. They can force owners or force residents to go through an approval process to disclose all of the pet's information and wait for the body corporate to give them an answer. The body corporate can impose conditions on pet keeping. So, all of the normal things like you can't have your pet bite anybody and you have to clean up after it and you can't take it in the swimming pool. Plus, if there's specific issues in the particular buildings, they can impose conditions as well. So if a particular building's had problems before with dogs, on the driveway, they might have different conditions to the building next door, which has had different problems. So that process is the same. The approval from a body corporate can take up to 6 weeks. This is a new change in the body corporate law. Previously, there was no time limit. So if you applied for a pet in 2018 or 2019 and the body corporate wasn't having a meeting for another 10 months, it could wait 10 months before it considered your application. And in that time, you just had to wait and you couldn't do anything about it. Obviously, that's not best practice and most buildings didn't do that, but some buildings did do that and it caused problems in the system, as you can imagine. So there is a new law in body corporate world which says that any application from owners or any motion of any reason actually has to be considered within 6 weeks. So it puts a time frame on the committee making decisions more quickly than they otherwise would be able to do. Which means that if you apply for a pet, no matter where you are in Queensland, you generally can expect an answer within 6 weeks, and it won't take 6 months, 12 months to get an answer from the body corporate committee. Another important point I didn't put on the slide, but the body corporate manager, so BCsystems or any body corporate manager, never decides pets. And in fact, the law says we can't have an opinion on it and can't decide pets at all. So anything that's from the body corporate is always from the members of the committee who are elected to make those decisions. You would deal with the body corporate manager in terms of making the application and corresponding about it, but it's not the body corporate manager asking or deciding, and therefore any pressure you put on the body corporate manager probably isn't going to get anywhere because it's not pressure applied to the correct person. So it's better to work with the body corporate manager, ask the questions of, is there anything I can do to speed this up? Does the committee have any concerns? Have they responded with questions or have they just ignored the request? Those sorts of discussions we're happy to have with owners, property managers, tenants. but the pressuring tactic, which is sort of a natural response if you ask a question and you don't get an answer, that's generally misdirected at body corporate managers when it's the committee members who are holding all of the power in that scenario. So that's the 6-week rule. Most body corporate firms, we definitely do, and I think ours is the best, but we've got PET application forms on our website which allow PET applications to be made better. You'll generally get a better outcome the more data you give, and our form requires people to put in there things like the council registration details of the PET. If you apply by email, you can do that, but if you leave out certain details and it goes to the committee, you might have a couple of members come back, ask for more information, and it just adds unnecessary time to the process. So the better your application is, the more chance you've got of getting approved, and also more quickly because people don't need to come and ask follow-up questions. And the last point there, the body corporate is not affected by the recent changes to tenancy law. So what I mean by that is nothing the body corporate does is going to be any different now in 2023 to what it was in 2022. So all of the rules about tenancy, tenants being able to apply for pets from the landlord, all of the conditions about the landlord not being able to refuse unless they meet certain criteria, that doesn't affect the way the body corporate operates. So all of those new powers for tenants are always subject to the bylaws, and the bylaws will overrule any landlord decision in a rental property scenario. So that's actually called out specifically in the tenancy agreement as well. So I just screenshotted the section about the keeping of pets from the Form 18A tenancy agreement in Queensland. So it specifically says that the property might be subject to a body corporate bylaw, and any authorisation the tenant gets from the property manager or the landlord is always going to be subject to the bylaw. So that just sends every application back to the body corporate for approval. Unless the body corporate might have a bylaw that says you can just have pets without asking for approval, those ones are really streamlined and efficient, but most of them don't have that bylaw. Most of them do require approval. All right. Just a reminder, if you've got any questions as we go, feel free to pop them in that question box on the GoToWebinar, and I'll come through and deal with those as we get to the end. So the link between bylaw breaches and tenancy agreement breaches now. So I probably should have mentioned this earlier, but I started my career as a residential rental property manager. So I do have some empathy for the work that you do. I know what it's like, and I've done it for many years myself before joining the Strata industry. So I try and bring that focus into our work, and that's why we're doing this webinar in the first place. So discussing the link between a bylaw breach and a tenancy agreement breach, I'm sure everybody will recognise these screenshots. So item 16 of the residential tenancy or the agreement in Queensland asks those questions about, are body corporate bylaws applicable to the premises, and has the tenant been given a copy of the relevant bylaws? Those are really important, and of course set the tone at the start of the tenancy for whether the tenant is likely to comply with the bylaws or not. It's very difficult to comply with bylaws if you don't know what they are. And an anecdote I probably give it out every time I have this discussion. When I worked in property management, we didn't understand as a business, the business I worked for, that bylaws would be different for different buildings. So when I joined that business, we were giving out the default bylaws in the legislation to all of our clients. So we gave that bylaw out to 600 rental properties, despite the fact that it probably didn't apply to any of them. So we thought we were doing the right thing by giving bylaws, but the information that the business was giving was actually wrong and probably was making that situation worse. So if you're an on-site manager of one or more complexes, you would definitely know what your individual bylaws are. If you are a general rental property manager managing properties in all different body corporate scenarios, make sure you've got a copy of each set of bylaws with that building's name on it and those are accurate, because that's the first part of the puzzle is making sure people have a copy of the bylaws. Now, in the tenancy agreement, Section 22 in the terms and conditions does set out that the tenant must comply with the bylaws. So that applies to all tenants. It's a standard part of the lease. It doesn't need to be added into the special conditions by the lessor or the property manager. And it means that the property manager can enforce bylaw breaches because it's also a breach of the tenancy agreement. So here we go. Breach of the bylaws equals a breach of the tenancy agreement. If a tenant breaches bylaws, they are both breaching the bylaw and they're also breaching the tenancy agreement. Importantly, under the body corporate law, the lot owner is often on the hook for damages or consequences as a result of breaches by the tenant. So if the tenant does something in the property and causes damage to the common areas, or rips a tree out of the garden area, the body corporate's action is generally going to be back to the lot owner, which means that it's important for the lot owner and the property manager to deal with that as quickly as possible to minimize any cost that the lot owner is exposed to. The body corporate doesn't know who the tenants are. It can take some actions in relation to tenant behaviour, but under the law, lot owners are the person who the body corporate can send invoices to. So the lot owner is exposed in that financial sense for their actions of their tenant, which is why you would have a sort of a consequential interest in making sure tenants abide by the bylaws, even if it's not causing any immediate consequences for the landlord. There is potential there for damage to occur. So for a tenant in breach of the bylaws, both the enforcement processes are activated at the same time. So the body corporate does have a process to rectify a bylaw breach. That involves the body corporate issuing bylaw breach notices, sending the tenant to the body corporate adjudicators tribunal, and then to the magistrate's court. So the body corporate can do that and does do it sometimes. At the same time, so on the same day that that breach occurs, the tenant's also in breach of their tenancy agreement. And as you all know, there's a process to enforce the terms of tenancy agreements, which is issuing tenancy breach notices. And if those are unremedied, or if they get a certain number of breaches for the same thing in a certain time frame, you can issue them with a notice to leave or not renew their lease. So those two processes are activated at the same time. The tenancy process, so the process that the landlord and the property manager can use, is much faster, cheaper, and more efficient. So what I mean by that is, and unless this has changed in recent years, the landlord and the property manager can pretty much issue a tenancy breach notice on the same day that the breach occurs or the breach is reported. So if there's not a big amount of paper trail to go through or red tape, it can be issued directly by the landlord to the tenant, and the tenant has to comply with it. Whereas in body corporate world, for the body corporate to issue a breach notice, it needs to hold a body corporate committee meeting, and then 2 committee members need to sign the notice and apply the body corporate's common seal, and then issue it by email and post. And if the body corporate doesn't know the tenant's name, it needs to then go back to the owner and get all of their information. So that process takes usually a couple of weeks. And by that time, sometimes it can be less effective the later it comes. So that's why a lot of bodies corporate will report tenancy, or report bylaw issues to the rental property manager and the owner and say, hey, can you please issue a tenancy breach notice, because it gets something out quickly. And for tenants, they're generally more threatened by the tenancy process because they know it can result in eviction or non-renewal of lease. The body corporate process cannot evict tenants, and it can't stop their leases from being renewed. So the body corporate process is slower, much more expensive for the body corporate as a whole, which means levies may increase to cover the cost of those processes, and it can't result in that tenant moving out. It can only result in that tenant complying with bylaws. So if you've got a tenant who, we all know there's good tenants and bad tenants. if you've got a bad tenant, the body corporate might spend $5,000 trying to make them comply with the bylaws. And in some cases, it's just not possible. And the only result that will be a long-term result for that person is for them to move out and move somewhere else. So that's the context of why the body corporate will come and ask for assistance with tenants breaching the bylaws. It's not to pass the buck or pass the responsibility onto the property manager. It's just generally to get a better outcome more quickly. And I'm sure, as we all know, if a tenant is out there breaching lots of bylaws, they're possibly not the best tenant anyway. They may be behind in rent, they may be causing damage or causing cleaning or maintenance issues to the property itself. So it generally sort of goes hand in hand with the general property management piece as well that you would just do as part of your ordinary work. Okay, some questions now. So let's have a look at these. These ones came through in advance of the session today, so I'll go through them in order. If you've got any other questions, pop them in the questions box in GoToWebinar and I'll answer those as well. So question one, big question, who manages visitor parking? So the body corporate as a group manages visitor parking. Visitor parking spaces are owned by the body corporate, which means all owners jointly own the visitor parking spaces. And the committee of the body corporate has a responsibility to enforce the bylaws and to keep the visitor parking for visitors. That responsibility, if it's a body corporate complex with an on-site caretaker or an on-site manager or a building manager, that responsibility is usually delegated to the caretaker or the building manager in their contract. So there'll be something in most caretaking contracts that says monitor bylaw compliance and bring non-compliance to the person's attention. So if there's an owner or a tenant who's constantly parking in the visitor parking, it will generally be up to the building manager, the on-site manager caretaker in the first instance to notice it, you know, talk to the person, you know, verbally, like say, hey, you can't park there, move your car out of the way. Maybe issue them with a copy of the bylaws and say, just a reminder, you're not allowed to do that. And if that doesn't work, escalate it to the body corporate committee, who can start issuing them with formal notices. Enforcing visitor parking, so then, you know, the next step is once you've identified that the person does know the rules and they are ignoring the rules, the enforcement process for an owner occupier or a tenant, the body corporate has the process of issuing that bylaw enforcement notice. If that doesn't work, they can start a proceeding in the adjudication office and then off to the magistrate's court. If it's a tenant, of course, they might report it to the property manager, who can issue a tenancy breach notice for the tenant parking and visitor parking in contravention of the bylaws. Visitor parking is very difficult to monitor because often you see the car and you don't know who it belongs to. A lot of buildings do ask residents to provide their registration details to the body corporate manager or to the caretaker so that the caretaker can sort of generally know whose car belongs to who and make it a bit more sort of accountable and people a bit less likely to park in the visitor parking or park in the roadway or in the garden if they know that the building manager knows their registration. Pets, do we have to have them? So you don't have to have a pet yourself. Of course, you can decide, but the body corporate doesn't really get much of a choice. The body corporate must approve pets unless there is a reasonable grounds to say no. So if you have a pet that has bitten 6 people and it has to wear a muzzle and it's got a dangerous dog order on it, the body corporate could probably say no to that pet with no dramas. But if it's a cute little puppy and it hasn't had a bad history and a criminal record, then the body corporate doesn't really have the ability to say no. So the body corporate has to say yes, but with conditions, and then it's up to the pet owner or the pet keeper to make sure they comply with those conditions. So pets are generally need to be permissive. You make them go through that pet application process so you know who the pet belongs to, you can contact them, you've got a picture of it, you know, if it's roaming around, you know who to talk to, but it's not that the body corporate can just say no to pets as a blanket rule. Okay, dealing with owner-occupiers who don't follow rules and park wherever they want. So I presume this question's come from an on-site manager or caretaker as opposed to, a Ray White, LJ Hooker type property manager. In the case of on-site caretakers and owner-occupiers not following rules, the steps are generally the same, except obviously if they're owner-occupiers, they can't be sent a tenancy breach notice. So the first step would be to make sure the person knows the rules. Often just talking to the person and saying, hello, Bob, I can see you're parking there, you're not allowed to, and I'm aware of it, you can't park there again. That's often enough to sort of just prompt people into compliance. Alternatively, if you don't know who the car belongs to, pop a note under the windscreen, sort of a first warning and an informal warning. If that doesn't work, then it needs to go to the body corporate for that official bylaw enforcement process. With owner-occupiers, it is worth the body corporate's time to follow that through to completion, because that owner-occupier is not going anywhere. They're not going to end their lease and move out like a tenant does. So if they're likely to be there for 10 years or 5 years, it is worth the body corporate's time and effort to make them comply with the rules. Otherwise, if they don't do that, the person's unlikely to get better on their own, and they'll probably attract other people to break the rules in a similar way. If they see one person getting away with it, it can often lead to copycat behaviour. So it does generally go back more to the body corporate if it's an owner-occupier, but those initial steps of raising it to the person's attention and making sure that they do know the rules and that they are actually knowingly ignoring the rules, that's generally where that building manager caretaker comes in the first instance. The body corporate also can distribute sort of general bylaw reminder information to all residents if it seems to be a general trend problem, and that can sometimes be successful. But most of the time, you see it at shopping centres where people park in the disabled park even though they don't have a disability. People generally know the rules and are ignoring them or bending them because they think they can get away with it. So information can only go so far, and sometimes you do need enforcement. Owners have multiple small dogs and are noisy. I assume the dogs are noisy, not the owners. That would be a bylaw issue. So regardless of the fact that it's dogs causing the problem, any noise nuisance is generally covered under a noise bylaw. And the body corporate would follow that same process as it does with parking in relation to noise. So all of the problems in body corporate world generally have the same outcome. It's that raise it to their attention, give them a warning. If that doesn't work, give them a bylaw compliance notice. If those dogs have been approved by the body corporate subject to conditions, one of those conditions might be, if they get 4 strikes or 3 strikes about the dog has to move out. So depending on the conditions, the body corporate may have an avenue to tell that owner the dog's not suitable there at the moment and they need to maybe get some more training or, be kept inside at night or something to try and make the dog less noisy or less of a nuisance. Number 6, I think we've probably dealt with that. Rogue lot owners is, depending on what they're doing, that's rogue. Rogue is some people are rogues, but if they're breaching the bylaws, you address it as a bylaw issue. If they're generally a rogue owner and they're causing a nuisance in other ways, like pestering people or, just being a generally difficult neighbour, there's not a lot the body corporate can do about that. It can't make people be nice neighbours. It can only make them comply with the bylaws. So if you've got an owner who's doing something that's very annoying but isn't covered by the bylaws, that might be a reason or a prompt for that body corporate to look at the bylaws, and maybe they need a bylaw that targets that type of nuisance behaviour. It might be a type of behaviour that was never considered when that building was established, 25 years ago. So the bylaws can be updated, and if you've got an owner who's riding their electric scooter around the pool area, you probably won't have a bylaw about electric scooters if the building was from 25 years ago, but might be something you can add in now as a group and try and address the behaviour in that way. Okay, what is required for the body corporate to make an occupier pay for water damage they are responsible for? So assuming this would probably be an apartment scenario, because water damage from one lot to another lot doesn't usually happen in townhouses, but it can if they've got a shared wall. So the body corporate legislation does require owners keep their lot in good condition or in a good condition. And if one lot owner has water damage, so their shower's leaking or the dishwasher hose is blown off or something and it's caused damage to their own property, that's their own problem and that's their own cost. If it's caused damage to a neighbouring property, it's generally up to the person who has suffered the damage to pursue the person who caused it directly. So the body corporate can't wave a magic wand and make the problem go away. The body corporate can provide the contact information of those owners to one another and put them in touch, but it would be up to them to resolve. If the damage is ongoing, so if there's a water leak and the person's on holidays and they haven't been able to actually stop it, the body corporate does have a power to enter people's lots and make repairs if that lot owner fails to do so. So the body corporate can actually get a locksmith and a plumber and pretty much break into that lot, fix the problem so that the problem is stopped, and then charge the owner for that, the cost of making that repair. So there are some rules around that. It's not something that happens often, but there is a possibility for the body corporate to step in and stop problems, which is different to dealing with the cost of a problem after it has already occurred and been fixed. That's something you'd want to talk to the body corporate manager about, because as I said, it's not common and there's lots of red tape around how to do it correctly so that the body corporate gets its money back at the end of the day. All right, who pays for renewal of isolation taps, body corporate or owner? So isolation taps are taps that turn off the water to a particular unit. If that tap only turns the water off to one unit or one townhouse, it's generally that lot owner's cost because it's only benefiting them. So going back to our principles about maintenance, the benefiter of that tap is the one owner. It's therefore their responsibility no matter where it is. If it's an isolation tap that turns off to a batch of 4 townhouses or turns off to a particular part of the apartment building and it's got multiple lots in that area, that would generally be a body corporate cost. So whose responsibility is it? Often follows who is benefiting. Item 9, so who's responsible for maintenance of guttering on shared block of units? So the question is asked about a block of units. So a block of units would be a building format plan. And the roof and gutters of a building format plan will be the body corporate's responsibility. So that'll be generally a pretty good rule for everybody to know. And the only caveats to that would be if it's a, guttering that someone put up on a little patio that they installed themselves, which is separate from the main building. That guttering would probably stay their responsibility if they've added it, but just normal guttering on a building and the normal roof and guttering and maintenance of that will be a body corporate cost in most situations. Question 10, if the body corporate admin fund has a huge surplus, how to budget for next year? So bodies corporate can end up with a surplus in their fund. As I said, the costs, the levies follow the costs and the costs are budgeted in advance. So if you budget for the insurance premium to go up by 10% and it actually stays the same or it goes down, which is pretty rare, but no matter what the reason was, if you've ended up bringing in more money than you needed, you'll have a surplus at the end of the year. That surplus, the body corporate doesn't, no one keeps it, it just stays in the fund. So if you need to spend $100,000 next year and you're starting the year with 10, you only need to bring in 90. If you didn't have the surplus, you'd need to bring in 100. So you can use that surplus to keep the levies reduced in future years. Depending on how big the surplus is, you may be able to do some adjustment and move some of that money into the sinking fund. It depends on how you came to have the surplus, how big it is compared with your normal levies, and there would be some strategy in how you best use that moving forward. That would be a question definitely for discussion as a committee group. It wouldn't just be a simple answer because it would take into account, all the different levy types, whether they're going up or down. If the sinking fund is getting reviewed next year anyway, you might want to put it in the sinking fund so that the future levies stay lower. So there'll be lots of discussions to have if your body corporate has a huge surplus. If it has a minor surplus, so I gave that $100,000, $10,000 example. Generally, if the surplus is less than sort of $5,000 or $10,000, it will just sit there and it will allow the body corporate to go slightly over budget or slightly under budget on some items throughout the year without causing an instant change to levies. So budgets, of course, are budgets, they're guesses, guesstimates, so they're never going to be 100% right. So you sort of allow for, 5–10% over and under on various costs, and that surplus amount allows the body corporate to achieve that and keep the levies as consistent as possible, taking into account the long-term inflation trend. Question 11, why do some levies attract GST and others don't? So body corporate is considered by the ATO to be a non-profit, like a company. So if the body corporate's turnover, it's not turnover in the sense of a business, but if the body corporate's income and spending is more than $150,000 in any tax year, it needs to be registered for GST. So the threshold for a small business is $70,000. For a non-profit, it's double, so it's $150,000. So buildings that have over $150,000 of budget, so the admin, sinking and insurance fund added together, those buildings must be registered for GST, which means they must add GST to the levies. Owners pay that GST in, the body corporate can then claim GST on its expenditure, and it just is a GST building, whereas smaller buildings with lower budgets are not subject to GST. A body corporate manager should be sort of just doing that as part of their business as usual, but that'll be the difference. If some levies you're paying include GST and some don't, it'll be the size of the budgets that makes the difference. Okay, what's the difference between running a townhouse complex and high-rise apartments? Do we need more experience for a high-rise? So this question will be no doubt from an on-site manager or a caretaker. In my career experience, I've managed both townhouses and high-rises. High-rises definitely require more experience in terms of the services to maintain them to a good standard, because there's just more stuff happening in those apartment buildings. You might have the same number of residents, so you might have 50 residents in townhouses versus 50 in apartments. So the tenant issues are the same. The visitor parking is probably the same, but high-rise apartments, as they get bigger, they have much more sophisticated and complicated building services. So high-rise apartments have, pressurized fire stairs and lifts and, chilled air conditioning systems and various pumps and, lift shafts and all sorts of things that townhouse complexes don't have. And if they fail in a high rise because they haven't been serviced correctly, or if the building manager wasn't aware of a servicing requirement and it didn't happen, and that service goes out, there's a much bigger risk because everybody is exposed, because everybody shares the same sort of building environment. So I would say it definitely requires more experience than townhouses, and it's just a different type of work. So you can definitely get experienced in it. But if you were managing 50 townhouses and thought you'd also buy a business in a high-rise apartment, I would suggest being really careful about making sure you've got an excellent handover from the current manager, or you undertake some training, especially in those areas of the building services that need to be maintained. And it's also just a different type of work. High-rises have a lot of cleaning requirements, whereas townhouses is mostly gardening. So those things are obvious, but it's the technical servicing of equipment and making sure you know what the contract requirements are for various parts of the building. That's where those high-rise apartment caretaking services often can fall down or be exposed to risk. Okay, what are some strategies for working harmoniously with body corporate while standing your ground on caretaker manager responses or responsibilities maybe? I would say that for a caretaking service provider, it can be dangerous or difficult if committees are constantly feeling like they're discovering issues. So I think one of the things I would suggest is that there be a meeting as early as possible and as comprehensive as possible to go through the contract and talk about every single thing that you can think about early as possible, documenting it, putting a column of who's going to do, is this a body corporate job or a caretaking job or a body corporate manager? and everybody getting clear on what those responsibilities are at the start. It's effort that you'd have to put in at the start, and the committee may not go for that idea, but I think the more you can bring that discussion into one focal point, and then if there's questions or disagreements about certain things, address all of those in one group, you know, get some legal advice on it or get an expert opinion about who's supposed to do what, document it, and then moving forward, people may not like that they think they were entitled to get something and they're not, or the body corporate's got to pay for, tree trimming and it didn't think it was going to, but at least you know about it all at the start. You can budget accordingly. There won't be surprises in the levies. So that's better, I think, than just sort of finding out as you go along and constantly having that discussion, and can be an argument sometimes. Every time a new issue comes up, you want to have got a pretty good guideline about who's doing what. And a lot of committees and building managers don't ever sit down and go through all of that in one hit, and I think that's probably a missed opportunity. It's something that we definitely encourage committees to do if they've got any questions about caretaking responsibilities, is to get the contract out, have a coffee, catch up, and all sit down and go through it, make a list of questions or queries and deal with them in one hit. I think it's difficult for people to create arguments or have disagreements where they've got the information up front. They may not like it, but at least, it's all clear and it's in black and white, and they're sort of just getting what they're paying for. All right, how should committee approvals for caretaking expenses above the caretaker's limit be put to a committee vote without extra expense? Short answer is that they can't. The idea of a caretaking spending limit is to give the caretaker automatic approval without incurring costs. Anything beyond spending limits needs to be made, have decisions made in a compliant manner, and those require disclosure to owners. That's where the cost comes in. So it's not a fee to make those decisions, but if you need to spend, $5,000 and the caretaker limit is $2,000, every owner in the complex needs to be informed about that. And that's all the, preparing the documents and posting and emailing it out. That's where the cost comes in. So there's really no way of getting decisions made without the expense. We will obviously give some practical advice. There's no point, spending $200 on notifying owners about something that's only going to cost $100. So there's a sense of, is this economical for the body corporate to do correctly, or should there be some rule bending if it's only a tiny amount over a certain limit? We try and be as practical as possible, but the idea of those caretaking agreements and the committee's decision-making process is that every owner in the building should know at every opportunity exactly what's going on. And of course, most owners don't want to know that, so a lot of those pieces of paper would go in the bin, but the body corporate has that requirement to disclose absolutely everything that it does to all owners, which is where that cost is. In terms of saving the cost, the committee might think about saying, look, if the caretaker's got a $1,000 limit, we're going to have a decision at an AGM that anything between $1,000 and $4,000 can be made by the chairperson and the treasurer, and over that amount of money, we're going to send it to a proper vote. So there may be ways you can create limits or other limits to make it a bit more streamlined, but the making of those limits also needs to go to owners for their information, so they know who's got what authorities and who's going to be approving what. Okay, voting at EGM. How many committee members and owners need to be present? So an EGM and an AGM, and the G is a general meeting, and that is a meeting of all owners. A committee meeting is the other type, which is just a meeting of the committee members, so the people elected to be the executive board of the body corporate in a way. A general meeting is all owners. So at the AGM and EGM, the default is that 25% of the owners need to have voted. So that can be an electronic vote for BCsystems or paper vote for other companies, or they come to the meeting. So if you've got 100 apartments, you'd need to have at least 25 votes on the motions for that meeting to go ahead. and you'd also need to have 2 people present in person or via phone so that there can be discussion on some of those things and there's some witnesses to the motions. The body corporate in most of the areas of law can reduce its quorum now. That's been a new change. So it can reduce the number of votes required down to 10%, I think. So out of 100 units, you'd only need 10 votes, but those are the general rules. That's a quorum, and there's information about that online as well. The last question is an interesting one. So a tenant managed by outside agent has lost the common security key by leaving her unit and common gate security keys in an open mailbox. Who is responsible for replacing 100 common security keys and barrels? The tenant, agent, owner, or insurer? Good question, and yeah, bad outcome. So if it's there's 2 types of keys. There's normal keys that you can cut at a locksmith or at Bunnings, or there's security keys like the thick, heavy, restricted keys. If it's just a normal key, then I wouldn't be so concerned about it because you probably have almost no security anyway. So if you cut 100 normal keys for a pool gate, you probably could assume that becomes 1,000 keys within 2 years because people cut spares, they give them to their neighbours and relatives and housekeepers and babysitters. So in that sense, it probably is not as big a deal as it may seem. If it is a security key that's been lost, so the thick, heavy, restricted key, that is not able to be duplicated. So the body corporate would have had better control over those thick, heavy security keys until someone loses it. The body corporate insurer does often provide insurance cover to rekey buildings. I have had this happen to one of my clients once, but it wasn't just an individual person's key. It was from memory, a fire contractor had been given the master key to the units and had lost that. So that was not only the key to get into the complex, but it opened all of the front doors of all of the apartments in the high rise. So that was actually a major security compromise. And the body corporate replaced all the keys to all the locks, and obviously cut everybody, 2 or 3 keys for their apartment door. It cost about $15,000, and that was covered by insurance, and the contractor paid the excess. So if it's a security key system, I would look at who actually has access to what. And again, something we talk about a fair bit in body corporate world is that security is often the perception of security rather than security itself. So if you're in an apartment building, for example, the car park's not secure, the apartment lobby floors are generally not secure. People tend to let in people from the intercom without knowing who they are. We go to lots of meetings, and I often get into buildings just by standing near the door and waiting for someone to walk in, and I follow them in. So it's a perception of security. It doesn't mean that it's 100% secure. And the buildings with 100 residents, 400 keys, and plus all the agents who have keys and all the owners who have keys, they're not a highly secure environment anyway. So I think in this situation, whilst the tenant and agent and owner may all share some responsibility for those costs, it would go back to the body corporate to decide, is the exercise of replacing everybody's key worth it? Some buildings will have a general policy of replacing all the keys every 10 years, just so that every 10 years or every 5 years, they sort of deactivate all those keys and fobs that have been duplicated over the time and sort of start from scratch. So it's not to get 100% compliant, but you try and just make it as secure as you can without wasting too much money on it. All right, got a question here from a couple of questions. So let me just see if I can make that a little bit bigger. Okay, I've got a question about maintenance. So what about an air conditioning unit for maintenance purposes that is inside the apartment, but is fed on cooled water by the cooling tower? So this is obviously a high-rise question because cooling towers don't exist in other buildings other than high-rises. In that system, so for those who don't know, there's usually or often a big cooling system on the top of the building. It sends really cold water or antifreeze down through the apartment air conditioners. The air conditioners turn that into cold air, and then the water goes back up to the roof and gets chilled again. So that chilling or cooled water system is a loop. The cold water system is the body corporate's responsibility because that is a building service and all of the units access it, or most of the units would access it. The actual device inside the apartment ceiling that takes that cold water and turns it into cold air by blowing air across it, that's going to be the owner's responsibility, because if that part of it breaks, nobody else is affected. If the chilled water system on the roof breaks, everybody's affected. So it will depend on what is, if the air conditioner is broken, someone needs to look at what exactly is broken about it. All of the internal parts like the remote, the little ducting valves inside the unit ceiling that turn your bedrooms on and off, all of that will be the lot owner's problem. And the body corporate would be responsible for making sure that the chilled water continues to come down through that air conditioner and back up as it's supposed to do. So if someone says, oh, my air conditioning is not working in a high rise, we would generally send it to the building manager or other owners and say, is this just affecting unit 10 or is it affecting everybody? And that we can deduce from that whether it's a single owner problem or a body corporate problem. Okay, next question. Is the body corporate responsible for animal removal from unit ceilings like possums? And how about the damage costs like walls or ceilings? Is it dependent on location of damages? So in the on our maintenance slide, we had the two main types of plan, so building format plan and standard format plan. So in a standard format plan, the body corporate is not responsible for that at all. And as I said, that's more an unusual type of plan. So most of the time, the ceiling cavity, so between the ceiling of the upstairs and the roof, is in a building format plan, that's nearly always common property area. And if a possum got into the roof and passed away, it usually would have got in through the roof or through like a vent or something on the common property area. So that would usually be the body corporate's responsibility to address. If a body corporate failure, so a roof leak or a possum in the ceiling has caused consequential damage to a unit, the body corporate is also generally responsible for that consequential damage as well. The body corporate in these building format plans would also be providing insurance. So a possum in the roof causing damage is pretty much the same as a roof leak causing damage. The repair of the roof itself would be the body corporate's responsibility because it owns the roof. And if damage has been caused to the unit below, the body corporate would generally need to pay an insurance excess, and the insurer would repair the walls and ceilings from water damage. If the cost is below the insurance excess, usually the body corporate would need to pay those costs directly. Internal damage to units to the building is different to furniture and contents and carpets, which are the responsibility of the owner. So if water damage came in through a storm, damaged the ceiling and also the bed would be the owner's responsibility to insure and repair. The ceiling would be repaired by the body corporate or the body corporate insurer. And if the leak was caused through the body corporate roof, the body corporate would pay the excess. So it's often not a simple answer, but it depends on the cause, what the cause is. So if the cause is just a roof leak or a possum, and then what is the resultant damage? So what damage was caused after or caused by the actual issue itself. All right, question about townhouse garage doors. Are the townhouse garage doors the responsibility of the body corporate, but the motors of the roller doors are the owner's responsibility? So I generally agree with that. Usually with townhouses, they are in this building format plan of subdivision, which means the outside surface of the townhouse is the body corporate's responsibility. And units are the same really if you've got that style of units where you drive in and it's garages on both sides and units upstairs. All those garage doors might be private to each garage, but still on the boundary of the common area and the private area. So those doors themselves are generally the body corporate's responsibility because they are the boundary. Doors and door fittings are body corporate. So with a garage door, you've got the actual roller door or tilt door plus the tracks and the guides and bits and pieces that make it function as a door. Those will be the body corporate's responsibility, as long as they're original to the building. The motor itself is a convenience for one owner. So if you take the motor away, the door will still work, but you just have to push it up and down yourself. So usually the motor and the remotes are going to be the owner's responsibility, and the door fittings and tracks will be, and springs and things like that will be the body corporate's responsibility. I think it's also important to know, or to just have a sense of, in these responsibility types, if you've got 50 townhouses with 50 garage doors, it pretty much over time makes no difference whether the body corporate pays for it or not, because if the body corporate pays for it, all of those 50 owners are going to pay levies to cover it for all 50 owners. So you're kind of paying for your own door anyway, just through the body corporate. Whereas if the body corporate doesn't cover it, the owners pay for it themselves, and over the time, it pretty much evens out to being the same in both scenarios. So we say this to people on the phone a lot, but things just cost what they cost. And the difference between a body corporate paying versus you paying is whether you pay it through your levies to the body corporate in advance, or whether you pay it directly to the contractor if and when your garage door breaks. But generally, that's the answer. Question, can we request a copy of the bylaws direct from the body corporate to ensure we use the correct ones for the complex, or does this involve a cost to the property manager or owner? I can't speak for other businesses, but we will provide a copy of bylaws to pretty much anyone who asks for free. So advice on bylaws is different, but if you just want a copy of the bylaws and you call up, we'll just send you a copy. There's no charge for it. Owners do have the ability, BCsystems clients have the ability to access that information for free online if they've got an account. If you're a property manager, you won't be able to have access to that account because it's linked to the owner's email address. So the owner might be able to provide it to you, but we can otherwise provide it if you ask. And if bylaws change, which they do sometimes, the body corporate should distribute a copy of the new bylaws to all owners and agents. If you've not heard a copy of, or not received a copy of bylaws from your body corporate manager for various complexes, your details may not be registered with that body corporate manager for that lot. So owners are typically pretty slack at telling us who their property manager is. So you can also do that. If you say, hey, I'm the property manager of this building, I've got units 1, 2, and 7, we will go and add that information to the file. And then if there's a bylaw issue in future, we can keep you informed about it. Got just a few more questions, so we'll keep going and then we'll wrap up in the next 5-10 minutes. A common breach we have at our townhouse complex is garages being used as storage, gym, living rooms, about 50%. So is this common to overlook, or how do people manage this? So people using their garage for other purposes is usually not the core problem. The core problem is then where they put their car. So depends on whether your issue is with the garage being used or whether the car is then parked in the visitor parking or parked in the driveway. Often the Brisbane City Council or whatever city council area your building is in will have rules around what garages can be used for. It may be advisable to have a question of the council on that topic if that's a common problem in your complex, so that you know the answer before you start poking the hornet's nest. It's often in people's best interest to have flexibility with their garages. If they didn't have a car and they filled their garage with a home office or something, probably no one would even notice. So usually the problem is the car is then parked somewhere it shouldn't be. So we have a general letter we send out that says your car needs to be in your garage. If you've got stuff in your garage like storage or you're using it as a spare living area, your car can't just be parked in the common areas, it needs to be parked out on the street. But councils require a certain number of car parks per dwelling because they don't want, if they build 50 townhouses or they approve 50 townhouses from a developer, they don't want 50 cars parked on the road. So that's why they make developers provide garaging for cars. So if you have that happen in a bunch of townhouses, the council may get involved and say, look, we required 50 car parks on site. You've converted 20 of those into bedrooms and therefore you're not compliant with the building's development approval. So I'd probably be asking an informal question of council first and then addressing the symptom, which is the parking. But yes, it's very common. Okay, question on standard format plan, the front driveway, which is used as a car parking spot for unit resident in front of their driveway, is it considered as exclusive use? Therefore, they are responsible for keeping it clean. The driveway on plan is shown partial common and partial owner private lot, but no one can park in front of each other's unit, and by default, no car should park on common driveway. Only visitor car park for visitors only. Yeah, so a lot of townhouse complexes are a style where you have what looks like, you know, house or a townhouse with a garage, and then in front of it is enough driveway space to fit a car on there, where it's not parked on the road or not sticking out into the road. Those are generally, in my experience, they're generally not official exclusive use spaces, but often get used as a second car space because it's in front of your garage and probably no one cares if you park there, as long as you're not sticking out. The body corporate could consider a bylaw, like adding a bylaw that said everybody has exclusive use of the driveway in between their garage door and the common area roadway, and they have to maintain that area. So if people are parking there, if it's not exclusive use, it's technically common property and the body corporate would be cleaning and maintaining it. But if you've then got a car sitting on there all the time and dropping oil and whatnot, that should be that lot owner's responsibility if they're creating a mess or a problem. So adding a bylaw to actually give those areas to people as exclusive use might be a way of clarifying the responsibilities there. You will have difficulties, or you may have difficulties, if the design of the complex is such that some owners have enough driveway to park a car and some don't, because the people who don't then, you know, may say, well, I can't park my car in my driveway, so I don't want to be responsible for maintaining it and cleaning it off. So it may depend on how much space is physically available. And if they're not long enough to fit a car on and the cars poke out into the common area driveway, then people generally shouldn't be parking there because it's a driving safety issue. Okay, question, can caretakers request one point of contact with the body corporate instead of having multiple people contacting them? So under the contract with caretakers, there generally is or sometimes is, probably more often than not, an appointed person from the body corporate to talk to the caretaker. That is not there to allow the caretaker to only talk to one person. It's there so that the caretaker doesn't get given multiple different instructions which are different. So it's, if the committee has got 7 people with 7 different opinions, which often is the case, like everybody has their own opinion, the caretaker would take official instructions from one person, and it's usually the chairperson, and it's up to the chairperson to make sure that whatever instructions they've given have actually been discussed with the committee and approved by majority. So there's an instruction element to that. But one point of contact, it shouldn't be that everything has to go through that particular chairperson. So if I was a committee member and I wasn't the point of contact, but I saw a, you know, Coke can in the pool and I talked to the caretaker, I think I would expect the caretaker to talk, you know, address that with me, tell me that they're going to sort it out and let me know when it's been fixed, even though I'm not the official first point of contact. So as long as there's some common sense in that arrangement, then yes, it can be useful for there to be one point of contact, but you'd still be contacting everybody. You just wouldn't be taking the instructions, official instructions from everybody. That'd be going through the one person. And that's our last question. So we've finished up just on an hour and a half. If anybody's got any last minute questions, you can pop them in. Otherwise, our details are available to you. Of course, a lot of people on the call today are clients of BCsystems, but there's quite a few who are not. If you're not, we're very happy to talk to you and see if we can give you a proposal to help your body corporate to be managed. If you're a general residential property manager and you've got clients with BCsystems as the Strata manager, we're often happy to talk to you as well and give you some quick guidance, even if it's not a property that we look after. Obviously, the extent of our advice would be limited if we don't have all the documents, but some of these basic points, we can just parrot that knowledge off without needing to know the individual circumstances of each building. So don't be shy to reach out to me or our team. All of our team members are listed on our website with their contact information. So look forward to continuing to work with you and hear from you. So thanks for joining, and as I mentioned at the start, we'll send a recording of this webinar out to all of the people who registered, and we're quite happy for you to share this with anybody else in the industry that you know who might have a similar problem, might be able to get something from it. There's no secrets here. So thanks very much, and enjoy the rest of your day. Thank you.